Hello, clients and friends. We wanted to reach out regarding President Trump's tariff announcement yesterday on April the 2nd and the related stock market sell-off. Without a doubt, the tariff framework Trump laid out was significantly more aggressive than what we or the financial markets expected. Starting April the 5th, there will be a 10% minimum tariff imposed on all goods coming into the U.S. And then on April 9th, further reciprocal tariffs go into effect on specific countries, especially those with large trade deficits with the U.S. So, for example, 20% tariff on the European Union countries, 46% on Vietnam, and an additional 35% on China. And these are on top of existing tariffs in place. So the average tariff rate on China is going to be about 54%, for example. These tariffs are frankly nothing like we've seen in over a century, and is creating significant uncertainty. And financial markets, they just really do not like uncertainty. So where do we go from here? We see two main paths moving forward, which will require us watching closely how countries around the globe respond to the Trump policy. Our base case right now is that most countries will respond with strong negotiations and quick negotiations, which we think could be very positive and lead to lower overall tariffs than we've seen over the last few decades and fair overall trade terms. We think this is the most likely path and could be very positive for financial markets in the back half of the year after there's been some time for these negotiations to take place. However, that's our likely case. We do completely understand that the other path is that there's a chance that many countries will retaliate with more tariffs and increase and create a tariff trade war, if you will, rather than negotiating. And this path would be really unfortunate and create greater risk for the economy and the financial markets. But right now we think this path is less likely. But we'll be watching closely. We're going to be watching to see if the Trump administration implements further tariffs that were not announced on April 2nd on specific products such as microchips, pharmaceuticals, critical minerals. There were a number of things that they said that they still might increase tariffs on beyond what they announced yesterday on April 2nd. So, this action could increase further uncertainty. And again, for now, we see this path of further tariffs and retaliation as a lower likelihood overall. And, if our base case plays out and we get favorable negotiations, lower tariff rates globally, we think stocks could do quite well. While recession and bear market risks have undoubtedly gone up since yesterday, we still don't think it's the most likely scenario. We think that U.S. households and corporate balance sheets are strong enough to weather the shorter term period when the negotiations are likely to take place. So, as of today, April the 3rd, the U.S. stock market, is measured by the S&P 500. It's in correction territory now and down about 12% since its February 18th high. We think the market's probably going to continue to be bumpy. That's what we've said all along since the start of the year. We think things are going to be bumpy as new policies rolled out, and it's been significant policy, more than we would have expected, and certainly the markets. So we've been saying it's gonna be bumpy. It has been. We think it's probably going to continue to be bumpy during these trade negotiations during this period while we try to get things settled with negotiations. But since 1950, in years where we've had 10 to 20% corrections, stocks are up on average 12% over the following year. So we think right now is the time to be really patient and give the market time to adjust to this new tariff reality. We don't want to pretend to know when things are going to turn positive from here. Rather we prefer to lean into what's most likely to occur and not try to time these day-to-day market movements. They're significant. And as we said, we've expected this type of volatility all year. So we think the tariff announcements yesterday probably puts us near the peak of policy uncertainty. Obviously, there's more to figure out. We're going to have to see how countries respond, but we think we're probably near the peak of policy uncertainty. And now that we're in that 10 to 15% correction range, we think things should start to calm down some and get a little bit better from here. Okay, it's going to still be bumpy, but I think the worst of the uncertainty has probably happened yesterday, and we're getting that reaction today here on Thursday, April 3rd. But we think we've absorbed a lot of it now. So I really want to stress that we actively manage your accounts here at Lineweaver. We trimmed some of the high-flying tech stocks earlier this year. We sent out trade notifications and rebalance trade rationale along the way this year. So we trimmed some of those earlier. We've been holding some defensive positions, some gold in some of the strategies that we manage, and we've been holding some cash. So now, with this market sell-off, we're seeing opportunities emerge, particularly with high-quality U.S. stocks. Many of those stocks are now trading at priced earnings levels that we think are very attractive. So in the coming weeks, you're likely to notice trades in your accounts where we're taking advantage of this volatility. Because we don't think the base case is recession and bear market. We think we've got a lot of negativity priced in already, and things should start getting a little better. So we're going to take advantage of this volatility and probably increase our holdings to some of these really high quality U.S. stocks. And we think it's a great time. If you have excess cash on the sidelines right now, we think it's a good time to deposit some of that cash into your investment accounts and let us put it to work for you into some of these attractive stocks. So, we know all the policy change and market volatility is really unnerving, especially after the great years we've had over the last two. And that's what we're here for. We're here to help. We're here to keep you focused, keep you moving along your strategy, and take advantage of opportunities like this. But again, just reiterate, we think now is the time for patience and to take advantage of this sell-off. Certainly not to panic or make any major changes with your strategy. We'll be following these issues closely, and we'll be in touch with you as we learn more and things change. But thanks for hanging in there with us. Thanks for your confidence in our team, and we'll be back in touch with you shortly. Thanks so much.